Well, good evening, everyone. Welcome back to the channel. So we've got Blake and we've got Andre here tonight. So we're going to talk about their favorite subject, YieldMax ETFs, and the dividends that we got for the month of October. So we will go into that. But do you each want to just say hello to the audience first?
Hello.
What's up, guys?
So this is the start of what we're going to be doing on another channel. We're eventually going to do at least a three-way, hopefully a four-way podcast. But I figured we would just do a dry run on my channel tonight and go live. So let's start out just recapping the dividends that we got from YieldMax. And I will go to the YieldMax site just to recap that. So let's see. And it looks like YieldMax finally updated their site. So there's a little bit of a different layout. So you can see each one, like if you kind of hover over it, like it actually will move on its own. Obviously SQY is the newest one. So TSLA is still hanging at an average of 50.72. OARK is 30.83%. And of course it's going to freeze up on me. So while we're waiting on that, let me just go back here to the comments and see. I think we started with like 8 of you. How was the screen? Okay, the screen's up there. Yeah, so there's OARK. Only got one comment, 12 live viewers so far. So welcome for everybody who's live. So what we're going to do, I'm going to point out, the dividends again, and then we're going to analyze further. And we've got some stuff prepped that we're actually going to go over, as long as technology will cooperate with us. So OARK again, 30%. And remember, as you scroll, you can see the dividend history for each one. We're dropping in this one. We hit 68 cents in August, but we're dropping from there. I think I accidentally clicked OARK, so let me go back out here. Okay, so Appley, 30%. So wow, OARK and Appley are actually on par. The way they changed the website is a little confusing.
Yeah, I do. I mean, it looks kind of
so
like the transitions looks nice though. Let's see.
The what?
The transition, how the screens move around.
NVDY. Like that. Yeah, I figured it out now. 35.79% for NVDY, AMZY 37.65, FBY 26.12, 22.72 for the Google one. For Coney, 77%. Did we already get our second one? No, that's the first one. It is 77%. That broke the record that TSLA had set. The Disney one, 15%, kind of low. Netflix, almost 40%. Microsoft, 16%. ExxonMobil, we got 18%. We got 15% for JP Morgan. And then these are all new. AMDY, PayPal, Square or Block. And then we're back where we started, full circle, TSLY. So those yields are obviously very appealing. They're still, even though we've seen drops, those yields are still unparalleled in terms of payouts. So now let's go over what else we're seeing other than just what the dividends are. So, Andre, do you want to tell the audience how much of a fan you are of YieldMax?
I mean, I would say when it comes to YieldMax, if you guys are very specific entries and exits, it's not bad. Like you have to really time your entries and exits and time your entries and exits. But I would say typically the average trader is not doing this. They don't have very specific entries and they're not looking for the gaps. They're just pretty much, I got paid today. I'm going to end up buying this before the ex-dividend. Ex-dividend pays. Yeah, they're up on paper, but they don't take profits. And if you look at almost all YieldMax, they typically trend down. So on paper, they're saying they're winning, but if they look at the overall, they're a little bit negative. Now, I don't know how much negative because I don't know where their buying points are, but I would say they're typically in bad positions. They're buying at the top instead of the bottom. They're not doing weighted buys. So for example, guys, if you had $100 and if the stock price is really kind of like trending lower, instead of buying like 100, spending your $100 all in one area, you can dial it down. Like, hey, I'll buy 1 share here, goes a little bit down, I'll buy 2 more shares here, goes down, I'll buy 5 more shares. You do a weighted approach. So when the market eventually bounces back, you can exit that position with that payout. So this one may be negative. It's kind of using the martingale strategy. You may be losing on this position, but these other positions will basically, since they're weighted, it'll kill the win and make the win bigger. And if you get that sweet dividend at the same time, then bam. But I would say the majority of people that trade they get into YieldMax, they're just dollar cost average, and their average is losing. If I have to like put a guess on it. But, I mean, my overall position would be shorting YieldMax. I think shorting is so much easier. But I'm not I don't think it's the most favorable position, since most people don't like to short stocks at all. Give me a second. All right, we're good on Rumble and we're good on Facebook now. I'm putting this on the live on Facebook.
What do you think it would take for these funds to like go back up?
Are you asking me or are you asking Andre?
Whoever wants to answer.
So go first. It's up to you. You go first.
If the underlying just steadily goes up by about 5% a month, every month, then all of these YieldMax funds they'll get carried along up. Just because of the strategy that they're employing, they're only really left behind when the underlying experiences more violent moves.
So once the Fed starts cutting interest rates again and the market across the board starts to run back up, we could see these recover.
And it really depends on the behavior of the underlying. That matters the most.
Yeah, if the stock market does go up higher, or these individual stocks go up higher, to me, like if you say higher, it's kind of like, are they going to beat their previous high they made a few months or the year prior? Like, how much can, like, when I look at the overall market, how long can this last? Because we're in such a high territory right now. Like, we look across the board. Is this good long term? Like, if we bring up a chart of Tesla, right? Let's see. I think was Tesla the most famous?
Yeah, it was the first one to hit like a 70% yield.
Let's bring up that on the charts.
But I mean, my theory, if interest rates are cut, then all those former FANG stocks start to recover. And then
it should. I mean, the currency has to go somewhere.
Right now, there's a lot of money waiting on the sidelines that is not in play. People are just waiting.
They have. I mean, to me, how would I say this? The Fed should increase rates. They should. Right? With inflation happening, they should increase rates. But I know how the Fed works. The Fed is going to drop rates, most likely. And if they drop rates and we go back to zero or near zero, then we might see a big push in the markets. Oh my gosh.
Coach, can you pull up that chart and we can talk about the erosion rate on Tesla?
Yeah. What do you want me to use? Yahoo?
No, the chart that I posted to Discord.
Oh, yeah.
Yeah, pull that up and then share your screen.
Yep.
I was bringing it up on a trading view, but if we bring it up on there, it'd be awesome.
So I've been saying for about 4 months now that my guesstimate for the long-term NAV erosion on Tesla was about 25% per year. And a couple days ago during one of my live streams, somebody asked me in the comments, hey, can you also, check NVDY and APLY and so I think it was a good idea for me to take a look at what Tesla is doing right before the stream here. So I sent Coach this chart.
Yep. Here it is.
And Coach has the numbers for the trend lines, but the tops and the bottoms have two different erosion rates. So we're just looking at the average. So Coach, what was the average?
23.3%, very close to what you guessed.
Yeah, pretty close to what I guessed, huh?
Mm-hmm.
And that's better than I guessed, by the way, which makes my guess like, a cautious estimate.
Mm-hmm.
And it's paying almost 50%. So I kept telling you sometime in the third year, it'll pay itself off. So like 2.5 years or something. If it maintains this slightly lower than 23% erosion rate, then Tesla is actually slightly more attractive than I was thinking.
Oh wow! I wish I can see like the orders where, like if I wish I can see the average person's entries. Like if we
why
right
don't
now
you
in
pull it up
hindsight,
on volume profile? Can you, Andre?
give me a second. Only he has a screen share right now.
Well, pull it up
If
on
you add
volume
a screen,
profile
I
and
can.
then clip it and send it to him.
Okay, give me a second.
Well, no, if you want to share your screen, you just add your screen like you've done before, and then I'll just put it up.
Sure.
Yeah.
Can we just load?
While he's doing that, let's just deviate for a second. So he brought up an interesting point. He's saying energy prices have a lot to do with inflation. What are you guys' thoughts on that?
So they like to remove a bunch of really important things from inflation when they measure it.
Yeah.
You know, like
CPI.
food and rent and oil and you know, all the things people actually need to live. It's almost like they're trying to paint a picture that isn't accurate.
There we go.
See, my thought on that, because I agree with what Hog Farmer's saying, but we saw energy prices start to fall last fall, actually, and it didn't really make a dent in inflation. So, because I thought the same thing before, like the summer of 2022, when we had that huge run up in like gas prices and stuff, I thought the exact same thing. But when they started to fall, we didn't really see a drop in inflation.
Well, that's because a huge chunk of our inflation was corporate gouging.
Yeah, just because they can, basically.
Yeah, because they can. As soon as the environment shifted and people accepted the fact that it was inflationary, all the corporations were like, well, we better get out ahead of this thing. And they just upped their prices and passed along their estimated inflation to the customers. Yeah, they're still doing it. Yeah.
Yeah.
And look at all the companies that were pushing out like 30% returns during the pandemic. They were gouging. Everybody was getting gouged.
Yep. There we go. Boom. Sexiness.
So there's your chart.
Andre, can you look at it in volume profile where the volume is on the y-axis instead of the x-axis?
Oh, you do it that way? Give me a second.
Because you asked where everybody entered. That'll tell you right there.
For me, when how I measure it, not just off the volume off that, I measure it just off the gaps, the main positions, like in the body of the bars, like, and where would the average person enter? And we're talking about because right now we're talking about cherry picking because we're talking in the past. So idealistically, everyone's saying they're going to be buying down here, right at that 13 level.
So because this is an open-ended fund, you can see the assets under management going up and up and up with the volume over time. This is not a closed-end fund. So when you send them a lot of money, they just wisp new shares into existence. They don't there isn't a whole lot of supply and demand changes going on with one of these sort of things because there's a bunch of algos constantly trying to fight it to keep it in sync with its NAV.
Let's see, Mesh. Give me a second. Let me bring CMF volume. Thank you. I gotta log in.
That's what happens to me with Seeking Alpha.
Yeah, you hit a paywall and they're like, please log in.
Yeah, I like
give me a
using
second. Let me
it,
log
but
in.
yeah.
Where would I enter right now? I would not enter it. Maybe a buy stop. Give me a second. You can switch off the screen because I gotta log in and start adding some of my own stuff on here.
Okay.
Give me 1 second.
I'm happy to watch Andre fidget with his settings.
Yeah, give me a second. Because for me, this was the only time that I saw, and then this is a short position right here. I mean, if you just make it very simple, what's a very easy common indicator? The MACD. Right, the MACD to me is rated in the top 100 as like number 50 or 60.
It's easy to read. It's really good for if you want an easy to read indicator and you're a beginner. The MACD is a great place to start.
Here, and I'll show you how typically people use it, and this is how I use it for its indicators.
Ooh, I would love to have a discussion on best ways to use the MACD because there's like 3 or 4 different ways to trade off of it, depending on what you consider a signal.
Trading gear. Why is this? Give me 1 second. I gotta log in, switch screens. Yeah, such a pain in the ass. Get started, logged in. Sorry guys about this. I got my fifth screen is taken by my laptop.
Hoffman, I 100% agree with you. Coach, go ahead and pull up Hoffman's comment. After we showed volume profile, I was going to ask us to change tickers to Tesla because I was about to tell Andre's like, well, you're looking for a short position. I was about to be like, well, if you're looking for a short position, you need to do your TA on Tesla because that'll tell you when Tesla is going to go down.
They're almost correlated though. Like,
well,
if I would short both at the same time though.
The movement of one is 100% dependent on what the other one does.
Except for the upside though, for TSLY.
Yeah, TSLY, you can think of that as like a bucket of water that's slowly filling, and every month when it pays the distribution, it dumps the water. But I'm talking about the rope that the bucket is hanging on. You know, that rope is directly tied to what the underlying's behavior is. Yeah, Hoffman gives me the thumbs up. Yeah, I 100% agree with Hoffman on that.
But the real question will be this: who is actually going to short it? Or just wait for the buy?
I would not short it. It only goes down 23% a year, and it pays a 50% yield. So no, thank you.
No, this was a sexy short right here. Like, just using the MACD. And I once again, I don't like the MACD as much as everyone that I see the public use, but MACD is a very easy indicator. Like, we're talking about like this right here. Even on your last live, we talked about this live. This to me was like the easiest entry for a short. Anywhere here and exiting in this zone. When THB was talking about buying, like, hey guys, buy the dip. I'm like, exit, sweet exit. Sweet.
Someone's asking about a bot trading service, bot alerts. We could try having them on and asking them what their strategy is all about.
Yeah, he said
I trade robots and create robots.
Bot.
Here we go. MACD, let's bring that open. I'm logged in, guys.
You bot alert indicator. Oh, UT bot.
All right, cool.
Yeah.
Actually,
oh, so you got logged in?
Yeah, I just got logged in right now. It updated on my internet goes really slow when I do StreamYard.
Yeah, when you have 50 robots running in the background trading Forex all the time.
Oh no, I have a pretty big server for it. Pretty big, really, really big. All right, let's delete this other BS indicator. All right, guys. So we have the MACD. MACD is a very slow indicator, but to me, it makes sense.
It's really good for showing momentum. It's not very good for showing the future, but it's really good for showing the recent past.
Here we go. If you use it as an exit indicator, very, very simple as an exit indicator, not as an entry. You can use we can use a moving average on a period of 25 or 50. You can use that. But if you guys are using this right here, if you have the MACD and have a continuous because we're looking at the daily, guys, if you have the MACD on a 3 or 4 red zone, so if it turns red for 4 days, exit that buy position. So we're looking like right here, okay? So for example, this is why when I was talking about trading and stuff, like the MACD it's not a horrible indicator, but to me, you could be doing a whole lot better profit. You can profit more off of better indicators. Like TTL, even the moving average to me is a little bit better.
Andre, I feel like we use very different buy and sell signals. So what do you use for a buy signal on MACD?
I would never in my life ever use MACD to buy. That would be like, you're losing so much money entering off of a buy signal with MACD. Because a MACD, even if you look at how it's programmed, like analyze it, how depth it is too lagging. Yeah. Like I can enter in 2 to 3 candles at a better price, either on a buy stop, before the MACD would indicate a buy. Mm-hmm. I mean, and for me, I would measure that like about 10 to 15,000 times when I do a strategy tester. I'll just go through 15,000 times and be like, why is it better?
So for me, the histogram underneath the 2 lines, not the 2 lines itself, but the histogram provides far better signals. So I've always treated this. So the 2 lines, there is one time when they actually produce a good buy signal. When they swing across, like you see that swing across right above the word May, there's a swing across that's below the horizontal of the histogram. Right above the word May, right in there. That swing across would have been a buy signal if it had taken place above the center line of the histogram.
I see.
Since it's below the center line of the histogram, the momentum is not strong enough, and that could be a reversion play if you want to play it as a fade. But that is not a go long signal. If it were above the center line of the histogram, that'd be a buy the crap out of that dip. But that is not what that is. So the other way to use the histogram for buying is the histogram is not the two lines, it's the business going on underneath the two lines. Waiting for it to change colors or waiting for it to cross the center line is kind of a bad idea. You can just look at its trend changes. So if you look right before the word May, when it goes from red to pink, and then back to red, and then back to pink again, right in there, that's a buy signal. Yeah, right in there. That red there. To pink. Yeah, right there. That's a buy signal on the histogram. Then you look above it. That was a really, really good buy on the candlesticks too. And then the time to sell the histogram is when it starts going back down. So if you go over a little bit more to the right there. Whoa, back, way back. Back there. To the right. Right. It goes dark green and then light green. There's like 3 light greens, and then it starts dropping.
Right here.
Yeah, that's the sell signal right in there. And I know that the price keeps going without you, but you don't care because momentum is falling out of this push, and you just need to get out before some whale with a short position comes in and wrecks it.
I see. So the difference would be this. So just say hypothetically, everyone, just say me and you got the exact same entry right here. Let's say we entered hypothetically the exact same position. Just say this zone, right? So we're talking about a say 1350. Me and you enter at 1350. My exit price would be, because I have so many entries entering at once, would be here. So for example, if I'm using the MACD,
I would exit right about there too.
Right, I would exit simultaneously right here and up here at the same time, because how I move my, if you guys don't know what a trailing stop is, my trailing stop will measure it about 10% from any big move. So once the average candle using an ATR, that's an average true volume, average true value, my bad. Once the ATR starts increasing in this area right here, then I know that, okay, there's a lot of fluctuation. Let my stop loss drag it up 10%. So if the current price is $15.89, just minus $1 and some change down. And then if it moves up, it'll just keep following it, and it will tag me out near 80 to 90% of the high. And if you guys want to do that when it comes to normal stocks without automation, it's kind of like this. If you have 100 shares or 10 shares, whatever, you can exit, say 10 shares. You can exit 5 shares here, another 2 shares here, 1 share here as you go up. So for me, I never, ever get tagged out and I'm completely out of position. I always lock in my trade and have carry positions through all of this. So once my last position exits, because the MACD did 4 red candles, right here, for example, did 4 red candles, I'll be completely out of my buying position, waiting for my next short position.
What are your other indicators aside from MACD, like RSI, Bollinger Bands?
We can talk about RSI. I don't really use it ever, but yeah, we can talk about it. It's not a horrible thing to look at. It's another one of those. It's another one of those indicators. It's really just good for telling you what the weather's like. It also does not tell you the future.
So the primary reason why I don't like RSI, because once you need a lot of violence to happen for it to make a shoot up. So most people like it at these 2 levels, the 70 and the 30, right? 70, okay, then it's overbought, 30 is undersold, or whatever value you want to put it as. I've seen people reverse it also. For me, the main thing is the baseline. Once you're looking at an indicator, you need a baseline to show, hey, is it a buy or sell? So for me, when I program this or analyze the RSI, I distinct it in half. Is it above this point or below this point? So at 50% when it comes to, go ahead.
Oh, I was going to say, so a lot of our audience are looking for ways to dollar cost average, and this would be a good indicator for them to look at to help them determine what is a low and what is a high, without actually having actual skills or experience with TA.
That's a good perspective. I like that. Let's use that for dollar cost averaging.
Yeah, this is a good indicator for dollar cost averagers. People who, anytime it's like below 40, just buy some and keep buying, and when it goes above 40, wait, go stick your money in SGov or Bill for like a month or 2. And then eventually this will dip back down into nice low RSIs and you start buying it again.
strength 7. Give me 1 second. If you guys don't know how to modify the period of the RSI, basically I'm just going through and modifying it to be faster to cover 7 counts instead of 14.
You're making it more sensitive.
Yeah. I usually put when I look at one indicator, I look at multiple values. I'll put it on the 7 period, 14 period, 30 period, have a large range, and then go through to see which one was the highest probability of enter. So if I entered here off of this value, which is it better than this value? Give me a second. Based on the RSI, like if you are a normal person, you're using this RSI and you have a baseline value. Remember, when you guys use an indicator, you need a base. Where is my underlying value where I need to be below? So for my rule, if I was using the RSI, anything below the 50. If it's below the 50, it could be a good buy position. And if it's below my hard line right here, the 30 value, I'm buying even harder if I'm using the dollar cost average strategy with the RSI. Like this right here, it would have been, if I'm going for that, the dividend, going for the long-term dollar cost averaging, I would be banking right here. That red zone right here, woo, it would have been, and then this would appear, and like we talked about before a few minutes ago, this would be my shelling off some of the profits. Buying deep, shelling off some of the profits.
Yeah, Cecilia Baker just commented, most of us are not traders, they're just buy and hold investors. So you buy and holders, pull up the RSI, and it is a fairly good job. It's not the best, but it does a fairly good job of showing you when the thing you're trying to buy is cheap or expensive. Especially if you pull out to longer time frames. Is this on a 15-minute? Pull it up, throw it to daily, maybe? It's daily.
Yeah, we're on
okay,
daily
yeah.
right now.
Yeah,
While
throw
you're
it up
doing
on a
that-
daily, and it'll give you a pretty good view of what the weather's like. And by that I mean it doesn't really tell you the future. It only tells you the recent past. It can tell you some pretty good indication about the present, but none of these indicators we've talked about so far will tell you the future.
Yes. And I made it easier. I put it in colors. If it's below your baseline, which is the 50 in this example, and using the 30 as an extreme, anytime, hypothetically, I'm not telling you guys what to do. If I'm using this as a strategy, if it goes below the 30, I'm buying deep. That would mean this. If I had $100, I'm spending $50, $60 below that. And then as it increases, I'm going to be buying 1, 2, or 3 shares as it goes. And then when it hits red, I'm exiting that position heavy. So we broke through, I'm going to exit. Instead, if I have 10 shares, I'm going to exit 6 shares. It hits it again, I'm going to exit 2 more shares. If that makes sense, guys.
So I can relate to what Cecilia said as far as buy and hold. I'm kind of that way too, like with stocks, but with these funds, buy and hold may not be the best idea because just walking away not looking, you might find that they've depreciated the 25%, like we were saying earlier, right?
Yeah, because right now, like off that short position, like if I was seriously putting this into my my broker allowed it, my $17, so 17 down to 13, so it's $4. 17, so 4 over 17. That's 23%. 20, maybe you might get 25% out, but that's a 25% move. To me, that's way better than the dividend. Like, ooh, especially especially because I'm all about leverage and a lot about risk. I love risk. Like, absolutely would take risk any day.
I need to teach you options because you should be looking at put spreads instead of shorting, because with a put spread, you don't have to pay the dividend and it all goes down.
He told me he's brushing up on options, so he'll know. Cool.
I took a Udemy course on it yesterday.
Cool. Okay. Well, I was hoping to walk you through in like ever increasing levels of complexity over the course of a couple videos or something.
You can still do that for me.
Yeah.
Excellent.
Yeah. By the way, so just real quick here. Hold on. Where did it go? Oh yeah, join Jen. Your money's right here. I found it.
Yeah. Oh, is it the prop money?
Oh, you're not supposed to say that. No, look, it's real. Look how real it is. See, it's my TSLA dividends. It's my 10 days.
Does it say 100 on winter?
No, in the middle, it's like all $1 bills.
Okay.
Yeah.
It's actually interesting. If you guys want to be super simple, maybe the RSI is too complicated. Just use. Actually, I can't say just. I would use a moving average.
Like a 9 or a 12.
Yeah, something simple like
Yeah.
moving averages. You can use a weighted moving average. Exponential is pretty easy. That's simple.
EMA is pretty common. We should probably just show them the EMA because regardless of what trading software they have, it'll all have an EMA.
Exponential moving
100% agree.
Yeah, exponential moving average. It's one of the most common indicators, period.
I even like a simple moving average as well.
I like to look at the 8 versus the 20, and then I also just plain like to look at the 9 all by itself or the 12 all by itself, depending on how volatile a market is.
Here we go. So hypothetically, guys, if you do the moving average strategy, I can't tell you what to do, but for me, there's a rule called cross of 2 or cross of 3. If you have, and this is a little bit technical analysis, if it crosses the buy zone, like the close is above the moving average, and you have 3 bullish candles, then the probability of it, not continuing is really, really low. So if you're using that rule, say cross of 3, cross and then 3 bullish candles, so you'll enter on $14.23, and if it crosses over 3, you would exit at the close. So you're probably around here. So you enter at 14, exit at 16, and here you would get kind of caught. But there's a rule when it comes to moving averages. If it gaps up too high, you don't enter.
What number EMA is this, Andre?
This is I think 14 or 12.
A 14, a 12.
12 on the high. If you guys do close, that's okay. But usually when I'm buying, when I know the trend is a buy, I would just put it to the high.
Can you throw up a 20 and an 8 at the same time?
Yep. Here's your 20.
So 2 things real quick. So that wasn't Join Jen, it was Join John, who's changed his name like 5 times. But what I want to say, so the 5 of you or so have said that you haven't gotten your dividends yet. It depends on the broker.
Call your broker.
Yeah. Well, E-Trade pays out earlier than Ameritrade. Like my account at Ameritrade, I haven't gotten mine either. And I'm the coach. So, but it depends on the broker. So, for one thing, there's special.
I hear someone in your Discord constantly bragging that Fidelity pays early.
Yes, they do. I do have. Well, I have one account at Fidelity. It's like an HSA, but they do pay a dividend before the other ones. Yeah.
So I like to look at the 8 and the 20 here because sometimes an 8 and a 20 crossover is a really good signal. Not every crossover is. Some of these are fantastic entry and exit locations. Sometimes, or maybe not sometimes. I'm going to say more than half the time.
Yeah, I mean, if you do a cross, I see for a normal, easy, like if you're a beginner, guys, this strategy is a whole lot better than the MACD because the MACD would probably put you over here for the entry. It's a little bit faster too. Yeah. And your exiting is right here. Yeah. Cross to cross. That's pretty sexy right here.
The 8 and the 20 is pretty good under most market conditions most of the time.
Right here. Like enter here, exit here.
And look at the short beforehand. Look at the crossover before that. That would have been a really sexy entry.
Yeah. I don't know how. I don't know the audience when it comes to shorting. If you guys are interested in doing that, there is a lot of risk when it comes to shorting or putting in puts. But for me, I love shorting stocks. Like
I don't short, but I do buy puts like pretty regularly.
A different perspective, there is a lot of risk when you short a stock.
Yeah.
Oh man.
You better have a plan. You better have a plan. Like if I'm talking about the hedges, the reason I don't have fear that is because if you weigh it right, the short will never lose significantly more value than like the underlying that you're hedging it against or whatever. So it doesn't really matter that the short is an unlimited risk strategy because it's hedged.
Interesting. We pull right here back. Actually, is there any questions about that? I use the 10, 20, 50, 10 crossover confirmation with the MACD and the R. What's the RAI?
He typoed. That's probably RSI. He's talking about the single most common indicators, using them all together, and that's a pretty good way to get situational awareness on the market, especially like if you if you haven't moved on to market profile and stuff like that yet.
Interesting.
Yeah, if you put multiple EMAs all up, it starts to look like spaghetti, but you can actually start using it to gauge momentum. So as the lines get wider and wider from each other, you can be more and more confident of the overall strength of momentum.
If you guys want to use multiple moving averages and one indicator, it's called the alligator.
Yeah, alligator's good. Yeah.
If you guys use the alligator, Williams alligator.
Yep, Williams alligator.
Really?
He has two other indicators that were pretty good too that I checked out a couple years ago because I was introduced to the alligator, and I don't remember what they were, but this one guy designed multiple indicators that were good.
Here we go.
We should also look at Chaikin money flow after the alligator.
Oh, the Chaikin, I love that, man.
Yeah, the money flow is pretty good.
Yeah, the CMF. There's also Chaikin when it comes to momentum. The Chaikin momentum is really good too. Let's see. This right here, like, I mean, if you guys want to make it very simple, this is an easy like ready, set, go indicator. Basically, if you have the green line on top and they all kind of cross in the same zone, you're looking at for a potential buy. It is a little bit more delayed, but I mean, in this example, you're entering here and you're over here. Like, that's a pretty good gain for a trade.
And so most of the audience are dividend owners, so they want to look for ways to identify bottoms. So this is going to be an okay way to help you identify bottoms because it shows you momentum. And if you're below the average momentum line, you're probably close to a bottom. That doesn't mean that it's not going to keep going down further, though.
Especially in this example, like right now, your blue line is telling you, oh my God, like, stay away from buys, unless you're going to be in and out trading. But since we're looking at dollar cost averaging, go ahead, sir.
I can confirm that E-Trade paid the dividends this morning.
Okay.
For the YieldMax. But TD Ameritrade has yet to pay.
I got to get a dividend from them. It's actually interesting.
Hoffman's over here continuing to ask, how does QQQY go up?
Where's QQQY? Yeah. You don't mind if I change it?
Yeah, you can pull it up. Sure. It's the short strategy where they sell in the money puts every day, and it doesn't. As far as I could tell, unless they're doing something wonky with the distributions, I don't think it goes up. I think it just slowly grinds down while it pays really, really fat.
I've had a lot of people messaging that want us to talk about this more.
Sure, we can talk about it more.
And they're intrigued. And I think, if I'm not mistaken, Jay also works with this company too. So when he does come back on, we'll ask him about it. And in fact, Hoffman, we'll ask your question to Jay.
Yeah.
Yeah.
As far as could tell by reading it, Hoffman, it does not go up. It just slowly goes down while it pays super fat. And there's no options market, so you can't like hedge it.
QQQY? This right
Actually,
here?
Hoffman, I'll ask your question to Jay if you help me prep for that again.
This right here, this new chart?
Yeah. It's only like 2 weeks old or a week old or something.
Okay, right here. There we go.
Yeah, 3 weeks old.
Why?
It pays like a 70%.
Oh man.
I'm too scared to touch this because there's no options.
Why would anyone buy this? Why?
Because they're too blinded by the yield, and I'm worried that it goes down like as fast as its yield or close to as fast as its yield.
Yeah, it seems like it's going to fall fast.
There's too many bodies. Like, I mean, okay, my bad, guys. Okay. Let's analyze the candlestick. Oh my God, this blows my mind. If your high and low, right, are equal to your close and open, and this happens multiple times, is telling you so many things that there shouldn't be a buy. Oh man, this gap is sexy. Like,
from this gap is sexy. From a momentum point of view, it all screams that it's going down.
Yeah.
I just don't know how fast it's going down, how hard, like I still have a lot of questions about their distribution. So if they choose to hold back some of the distributions, this could potentially not go down super fast. Like it could even have months where it, hangs out sideways almost.
Almost.
Well, like if the underlying enters a really strong bullish trend, and this thing just hits an endless series of selling in the money puts and then getting to close them for huge gains every day. And then what if they're keeping like half of the distributions? Like the underlying NAV could go up. Like if the underlying behaves a certain way, the NAV of the fund could actually benefit pretty significantly. But when I read the prospectus, it sounds like they're paying 100% of the distributions out. So this thing just goes straight down.
So what are actually some good, so like some decent like covered call ETFs, like probably JEPI or SVOL?
SVOL, let's try that out. SVOL.
Which I sold out of.
Okay, yep, my bad. That's the wrong thing. All right, let's go to the daily. Actually, I prefer the weekly if it's an old one. Oh, wow. This is, from 2021? Okay.
Yeah, it doesn't go straight down. It trades sideways. Sometimes it'll have some bad times. Like right there at the what is that? The end of 2021, this thing started going down really hard.
You're gonna have to be. So, do you? How do I say this? If I'm going to get into this, what would be the normal person saying? Like for me, I already know what I would do.
That's SVOL that he has up. Sorry, someone in the audience, no one can see because it's too small. It's SVOL.
I see it top left there. That's SVOL.
You need to hit Control plus so that the letters become larger. There you go.
Would the average person be going for the dividend?
Yeah, this is another one of those like 95% of the participants are only interested in the dividend.
Because man, look at the down move. The up move, like if we start measuring how many so this is something when you guys start really looking at charts, look at momentum and look at how long does it take for price to move up. So if we're looking at the buy. So from this, let's say at this current price, say $22 flat, how many weeks did it take to go up to that last high? Like if from $22 to $23.41, it took 1, 2, 3, 4, 5, 6, 7, 8, 9, like 12 weeks. 12 weeks for $1 plus move. Like, come on, people. Like, I would just look at the shorts. Like, the purpose of this is to short. That's where the money's at.
Oh, I wouldn't short it because it pays kind of fat. It pays 17%. So I would buy puts or sell calls. Yeah. Sell calls. Yeah. I'm just saying there's other ways to make money on the way down besides shorting.
It really, oh yeah, I see what you're saying. But if you zoom out, it doesn't fluctuate all that much.
Oh, my bad. Give me a second.
So what was its opening price like 3 years ago, and what's its? Let's do a rough estimate on its annual erosion rate, right? So it's only dropped $2.50 or something in.
Yeah, it's not bad at all.
In 2.5, 3 years, yeah. It's not. This thing is not a fund that goes straight down.
From the peak, it's down closer to $6.
But if I have to bet money on it,
yeah.
So it's down like money on it. So here's the funny thing: it's down what it pays out, basically, but annually.
Down what it pays out.
Yeah, annually though. So overall, that's still not bad. I mean, that's a little misleading because in 2 years it's down 18%, but it's paying 17% annually. So that's like 34% if you double,
But I would say this: the average person probably bought heavy up here because look at these two candles. There's a lot of activity. I think a lot of people bought into it because they bought into the hype and it went up, and then they smashed it and it went down, and they kept on buying.
That's exactly why what FW is saying because of the VIX. There was a spike.
Let's take a look at an actual company. Like pull up Otis, because they pay a small dividend. It's like a 2% or something like that. But
what is it?
OTIS.
All right, Otis, United States, National Exchange.
Well, like November 2021 is when it peaked. That's what I'm looking at.
So let me try to sell the audience on this. This is why you pick individual companies and not funds, because the fund is stuck doing some mechanical behavior based off of the underlying, and the individual companies underlying, you can actually go read the financial statements on what's going on there, and often it's much more clear whether or not a company has strong financials and whether or not the underlying is worth investing into. And with some of these funds, it can be extremely unclear whether or not the strategy or the mechanics is a good investment. So this is a spin-off from Raytheon. They make elevators. I'm going to mention them like every other week or whatever until...
Raytheon?
This company was founded in like the 1850s or something. You can go look it up. It's a
You told me, yeah.
107 it's a 170-year-old company, but
Yeah.
at one point they were purchased by mergers and everything, and then owned by Raytheon, and then Raytheon spun them off back in April of 2020. And they are so ridiculously profitable that they just keep buying back shares. So they don't have a super high dividend, but they have really high returns. And they're sort of stuck in a location in their business life cycle where they don't have easy markets to expand into, right? So everybody who owns a tall building already has an elevator, and so their rate of finding new customers, even though they have really high returns and they make a lot of money and they're drowning in cash, their rate of finding new customers is actually really low, and it's actually really hard for them to find new customers. So fortunately for investors, they're drowning in cash, and they know they have trouble finding finding new customers, so they just buy back a lot of shares. And in the last, I don't know, 2 years or something, this thing's basically doubled. And I expect it to keep on just grinding upward. So all of you on here that are chasing dividends, this only pays like 1.5% or something. It's not very high, but I have extremely high confidence it's going to keep paying because they're drowning in cash, and they have very low competition. So I like to look for long-term compounders where the fundamentals of the company is just super strong. And I don't particularly chase dividends in general, but I am researching, how to fat fire. And so this is why I'm all like researching Tesla and everything. But this is a perfect example of a company where you should look into their fundamentals and teach yourself how accounting works if you don't know all that. In fact, that's something the coach and I should do on a channel here, is cover fundamental analysis and what it takes to actually value a company and become a value investor and see.
I have before, like I used to go into like the cash flow statement and look at the free cash flows and all of that.
Yeah, a lot of that'll bore people. So maybe ahead of time we should like have me get into Excel and make some charts, and I'll show it. I'll show it with charts, like I was showing you last week or whatever.
This is not bad. This is interesting right here. Like, and for me, guys, when it comes to like looking at a company, before I look at the basically all the filings, all that crap, I look at the chart first just to see if it's worth my money.
Mm-hmm.
Like, because for example, like if you bought this right now, sitting at $81, your upside just from high to high.
That's a bull pennant.
Yeah, you're talking about $9 up. So how I do this is something that I do personally. I have a spreadsheet of all the stocks that I make, right? So if stock one says, like Otis says, I can make $9 off of each share in X amount of months, for example. Just say we're just doing 1-to-1. What I do is on my Excel spreadsheet, I have thousands of companies saying, okay, which one can make the most profit in the shortest amount of time? And if this one's like a bagger, like he's talking about a bagger, like long term, yeah. To me, if it's long term and just pays, I'm just going to dollar cost average. I'm like, is that a low? I'm going to buy it. Now low, going to buy it.
Give me a minute, and I'll pull up their annual returns, and then I can produce an estimate for how hard they're going to compound.
Here, like from a trader's perspective, $9 up on that, and it might take a few weeks. It's not too bad, but if you're talking about like a dividend play, long term play, then that's pretty good. Right.
So audience, so we baited you in with all the YieldMax titles and stuff. Now we can talk about what we actually want to talk about.
Long-term compounders and trading.
That's what I have to do, like for 6 months. Like, all right, YieldMax, and then I can actually talk about.
Okay,
like
so
20 minutes.
So this company is compounding cash flow wise at a quarterly rate of 14%.
Wow.
Yeah. So you're all like, I want to make money trading, and I'm all like, I want to put 10 grand into this thing and just wait a bunch of years.
Wow. So you're talking about they double up every 5 quarters.
Something like that. This is why they just got spun off from Raytheon. What are you going to do with 14% free cash flow every quarter? Like, what's your plan with that?
Dang. Huh. Yeah, check out another company long term.
Yeah.
When it comes to trading.
And this is one of those, I don't know about debt or anything. You can look into that on your own. I'm looking at a chart for return on capital.
Let me see.
They're drowning in cash, and that's the type of company you want to invest in long term. Is like low competition, or they've already dominated their market. They already have some sort of monopoly, and they're drowning in cash.
Seems like a nice problem to have.
That's the type of company that Warren Buffett and Charlie Munger like to buy. Is
right.
Drowning in cash.
One thing, it's funny, because he used to like the book to value ratio to be like 1, but in today's market with everything so like overvalued, you're not going to find that anymore. And the ones that you do, because I looked, I did that test myself. The ones that you do, it's very like misleading.
Yeah, they're usually in some kind of death spiral or on the verge of bankruptcy or something like that. If they're trading that cheap.
Mm-hmm.
Go for Schindler's Escape.
Schindler's Escalators.
Escalators.
Is that a joke?
I'm not sure if that's a specific form of technical analysis or if that's like a. I don't know what that is.
Some kind of a joke.
Levels. Let me see. Okay. Oh, I didn't explain. Guys, if you're looking at what I just put on the chart, all I'm looking is key points and key levels for it to hit and break. If it can repeat it and duplicate it, it should break past this and head higher. Especially like this right here, this little doji. Oh man, 2 dojis on the weekly. Really good signs of it pushing back this to here.
Doji and Dogecoin.
A doji is basically like when you're looking at it, it's kind of like a T. There's like a long-headed doji, kind of like a hammer. There's inverse. For me, so when I'm looking at it, I'm like, okay, so like here, a bullish buying area is when you see something like this. If you see a big market push down and you see an inverse hammer and it's stuck between 2 candles, that little sandwich, oh my God, it's so sexy. Like this instant market, not a market buy, more like a buy stop. Put buy stop between 50% of the wick. So when it kicks you in, you have a very short stop, and then typically heads up higher.
So yeah, this is a bull pennant. So the market bullish went up and hit that first top in mid 2021, and then it bounced down and found a new bottom in late 2022, and now it's grinding back up to retest, and it got bounced off. I don't know, a couple months ago, and now it came back down and found new support right here. So this is actually a pretty good place to buy. I'm not going to say there's like no risk or anything, but it just found support, and it's trying to form a pennant. Now that does not mean it can't just grind further down. It totally can. That's something you got to understand about technical analysis. Yeah, the most advantage it ever gives you is like a 51.49 or a 53.47 or something. Only very rarely will good TA show you like significant edge, like 80-20.
The next candle should be, so for example, if this candle ends up being a small close, the next candle should be a body to body. So it should be the open should be equal to the low and the high should be equal to the close. If that happens on the next candle, then this would be a very good push to 87.50.
I don't think they're interested in trading, Andre.
Yeah.
But you're right. We are in a bull pennant right there, and if it breaks to the upside, ooh, that thing could run. I mean, look at it. There's free air up there. There is no price history above that. There is 0 people. There are no bag holders up above 90 to 16 or what? 0 bag holders. So if the price gets up above there, it's free air. It could just keep going and going. It's hard to tell how far it'll go, especially since this is a fresh ticker, right? There's no price history up there.
I think a good strategy would be, if you guys want a simple, not an Andre complex one, but how I'm thinking it, just do a grid style, a bunch of buy stops.
That's way more complicated than most people are willing to do.
Can you do this, Andre? What he said?
Slap up supply and demand zones. Yeah. Show rectangular boxes of zones of liquidity.
Okay, here. Give me a second. Let me remove all this funny.
Are you familiar with the phrase like zone of liquidity? Is that a Forex thing? Okay.
Yeah, I love liquidity zones.
I know like only 70% of our vocabulary is the same because we come from 2 different schools of TA.
Here we go. Give me a second, guys.
Oh,
If you guys can
hey,
see
Andre,
the
do you want
charts.
to explain real quick too? Like you were saying, so binary options and what you've learned so far with options, like they're very similar.
Yeah. Because
Yeah.
for me, when I was learning about options and took the course, I was like, okay, so what's the difference of me getting into this? So the biggest difference is one, when it comes to binary options, we can't hit the same assets. Options, you guys have way more. You guys can get into options on almost every stock out there. Binary options is only the big companies like Tesla, some of the bigger ones, not everything like the Russell 2000. So we're just talking about just the Dow, some of the S&P 500, and some of the NASDAQ. They have the same expiration dates. Ours are typically a little bit more expensive when it comes to the strike price, but I think when it comes to correlation, like the only difference is the volume of what you guys can do, how many assets you guys can get into versus what I can get into. But everything else is almost apples to apples. All right, let's get into this. All right, so let's go for liquidity zones, guys. Oh, man. I hope I don't want to make it complex, but basically, guys, we're looking for areas where there's a lot of money sitting. Okay. Liquidity, basically kind of like oxygen, guys. The more oxygen something can move, the bigger the breath, the bigger the chart. Bigger the bar. Okay.
Andre, pull up a volume profile. You're in TradingView. They have volume profile indicators.
Oh, they do. All right.
They should. I don't have a TradingView account, but every check in money flow. We can talk about that too. That's a good one.
Oh, I think I clicked it too many times. I think I clicked it. Let me delete this. Oh, the 20. God, not the 20.
So the money flow does a pretty good job of showing you inflows and outflows. It is almost a momentum indicator. You can almost think of it. It's almost stochastic in nature too. So it kind of has both qualities.
I should bring up the stochastics.
But it can help also make clear when you have found a bottom. So I know a lot of you are dividend investors, and yeah, Hoffman, we will get to volume profile in a second. I promise you. I'm going to keep asking him. Yeah, and he's pulling up a stochastic. So you see, this is why I tell you it almost behaves like a stochastic. And these two indicators are both fairly good at showing you bottoms.
A second, let me zoom out a little bit. I'm at like 150%. Okay. Is this visible for you guys? Can you guys see it pretty good?
I'm on a different screen, but let me look.
Is this okay?
Yeah.
All right.
So Chaikin money flow is another one that's pretty common, and so are stochastics. Just so the audience can see these. But you notice not every bottom on the indicator is an actual good bottom on the candlesticks, right? On the actual price. So there isn't really a direct correlation, and you can't really like use them in a void or a vacuum all by themselves. They're not really useful unless you start pairing them up with other indicators or have something else to look at. So now let's try to go to indicators and type in volume profile.
This is fun now.
Volume profile. Yeah, and I'm not very familiar with these specific ones, but I'm very familiar with volume profile in general. Yeah, but try the top one or whatever.
I got to turn off one. Give me a second. Right, let's get rid of CMF. CMF is so good, though. When it comes to CMF, guys, that is a damn good indicator. Oh, my gosh.
What does it stand for?
Chaikin money flow.
Yeah, if you guys use it properly and analyze it, how would I say it?
It's a good one. If there's a way,
if you use the baseline, control your baseline. Oh my gosh, you would remove a lot of losing trades. Volume profile.
I'm just really happy to find a second person I can talk to about trading who isn't full of shit.
Can I just add
Thank you, Andre.
No, I don't want to do a 30-day free trial. I don't want.
Are they all paid? Is that what it is?
Yeah.
Oh,
yeah,
that's annoying. I suppose I can pull it up in TradingView.
Yeah, all of them are paid.
I don't want to pull it up in TradingView because I don't have to share my screen. Let me pull it up in TradingView and clip it and drop it in Discord, and then Coach can show it.
Maybe there's one. Everything is start 30 days. I don't know. It's like, even in trading, I refuse to pay certain websites just for like an indication.
Yeah, it's silly how much almost the entire finance world is like, pay me money or else you don't get the information.
I avoid a lot of scams, but there's one or two of them that get me, that make up for it.
Yeah, for some reason I keep on paying my internet service provider. I don't think I should. Feels awfully
getting like they're getting like 5G internet now, and I can get it for like $25, but I'm paying like $60 for Fios.
Fair value here. Have you guys heard of the fair value gap? There we go.
Another one that I know TradingView has is VWAP. We can show them standard deviation VWAP. That is a beautiful indicator that we should show them. It is also good for helping people identify bottoms.
Okay, so fractals. Okay, give me that. Fractals.
Walked into the wrong class.
Let me see. Okay, guys, I can't even get fractals. Wait.
No, they want you to pay for all that.
That's so annoying.
Pull up VWAP. Pull up.
We're in the wrong business.
VWAP with standard deviation. It should be.
Volume.
Yeah, I guess the top one. Sure, try that one.
I can't.
We need to just design this stuff ourselves and charge for it.
Do you have too many indicators already selected? Is that what it is?
No. If you click it, you have to pay for it.
Click on the standard deviation. Go down like 3 of them. No, don't click on those top 2 anymore. Go down to like the third one that has 6,000 people that are using it.
Stochastics. Maybe that's probably the problem.
Yeah, remove the old indicators.
Okay. All right.
Oh, Hoffman says make fake script.
Where's that 6,000 right here?
Yeah, I'm pulling up my Thinkorswim right now.
I wish I could share my screen for Thinkorswim. You guys might actually be impressed. But it won't let me because this is integrated with Chrome.
Visual.
Ah. Oh, I was just going to take a picture and send it to you, but let me get a beautiful picture to take.
I've done that showing some of my options trades from the past. I've had to take a picture and show it.
Okay, let me maximize this cell.
Such an annoying thing. This won't even let me show it. There's no chart on the side of it. Just, but let me see.
I had web-based before Hoffman. It's not as good.
THB. Otis is in the downtrend. Otis is in the downtrend? Really?
Well, I don't care about trends.
Okay, since we can't have anything good, let's do Arun.
Get rid of this indicator here.
Arun oscillators. Arun variant. I think about indicators, guys, that if you guys want to evaluate, if you're going to use an indicator, what I would do is this. I would get a list of 100 indicators or 10 indicators and then put them on a chart and then compare and contrast the indicator to the other indicators to see which one is more valuable on that asset or stock. So if you want to compare like the CMF versus stochastics to see which one is better for whatever, but just the idea of comparing indicators will help you find the more accurate indicator. So when it comes to the RSI, while I would never use it in my entire life, I would compare the RSI versus the MACD, for example. I know they measure different things, but if I had to enter based off the RSI with a moving average, which one would have been better? So you guys can compare and contrast that to improve your trading. Oh my gosh, let's see. A room-based strategy. Let's try that. I don't think I'm getting any love off these charts. Like every time I check these indicators, these fancier ones, I'm not getting any. I'm not getting any value. Like it's asking me to pay.
All right, I'm going to send Coach the first
Except for
of
this right here.
the first of probably
Fast ones
several
would have been
charts
better.
here.
One question.
When you send them, I'll just post them on the screen.
One thing I want to bring up about technical analysis. So, like, go back to like March 15th, 2020, and you've got all your charts prepped.
March what?
March 15th. No. You don't have to literally do this. I'm just saying, like, for an example. So, like, go back to like mid-March 2020. You have all these charts. You've mapped everything out, and then boom, COVID. And then everything free falls, and none of that was priced in like the day before.
Well, I mean, I liquidated everything. I don't know about you.
Well, I'm just bringing that up as
When
an
it came to
example of
COVID?
like
I was
when that
pricing it
happened,
in.
like everything that you planned like the day before is kind of like out the window. in terms
I
of
was
things
pricing
going on.
COVID in from the last week of December when I heard about it on Indian news. So I watch international news, and the one thing you can rely on India for is making fun of China for Schadenfreude. So as soon as a outbreak happened in Wuhan, the Indian news was covering it like diligently because their viewers like to watch all that. So I heard about it, and then I heard that they were building a hospital, and it would be done in a week. And then 3 days later, this is all over the Indian news. And then 3 days later, they announced that in Wuhan they're building a second hospital, and it would be done like 3 days after the first one, so it would also only take a week. And that's when I went out and bought $1,200 worth of canned food, and like started prepping because I knew that this was going to be like for real, and the rest of the world was just going to ignore it. And so like you're all like, oh, it just hit the market in mid-March, like, and I'm like, I was ready. I was more than ready.
Just any example of something that happens that is never mind.
Oh, I'll hear it, Coach.
I think me and you had different approaches to COVID. I got wind of COVID from all the filing of the senators' representatives. So I look at what they buy, and when the quarter came out of what they bought, I'm like, okay, why is almost all the senators and House of Representatives buying medical stocks? So
yeah,
I was stuck in a 70-hour-a-week job.
Ooh, rough.
That's why I started the YouTube channel.
Just to get away from work a little.
Look at that.
No, to try to have a way out.
Oh.
Yeah.
Wait, so you're still stuck in the 70-hour-a-week job?
No, I changed jobs.
Okay.
They sent us home, thank God. I would not have lasted. I would have quit.
Yeah.
70 hours a week?
At the time, yeah. They were reluctant to send us home.
Oh, man, I take that. So
Jimmy Diamond wants everyone in the office all the time.
Back in my younger years, if there was a 70-hour shift available, I would definitely take it.
Well, not when you're salaried.
Yeah,
I was salaried. Yeah, I was salaried for like 9 years.
I know what I'm talking about.
Yeah. Once you're salaried, they drive you for hours. They try to get every hour they can out of you.
And you don't have time to follow things because you're micromanaged. You know?
Yeah.
You're in an office, like in a 6x6 cube.
I mean, Moderna did fairly amazing during this time period. Absolutely, wow.
I'm trying to draw some boxes so I can post a second photo with.
They could have blanked your entire business and be closed for 6 months. I cannot.
We lost the coach for a second. Okay, hey coach, pull up the second photo that I posted to the Discord just now, like a couple minutes ago.
Oh, I got Discord up right here on my other screen.
Or Andre, pull it up.
Yep, I got here. I got Discord open right here. Oh, we can look at it. Oh, awesome. Here we go.
So this is volume profile, and this does the single best job of showing you value of any indicator. And just like all indicators, it doesn't tell you the future, but it sure can show you what traffic is doing, like what the rest of the market is doing and stuff. Okay, so that's showing. Zoom in a little bit more on the stuff going on the right. Yeah. So when magical things happen when you throw the volume on the y-axis instead of the x-axis, all of a sudden you can see fair value on the chart. And it becomes super clear where a majority of buyers and sellers agree on a price. And so if you are above or below one of these high volume nodes, you can be pretty sure that you're above and below recent fair value. So if you look down, the lower high volume node is from, I don't know, a couple months ago or whatever. And the recent high volume node is from after the bull run up. And it's been sort of forming a bull pennant for a while now. What ticker is this? This is Tesla. Okay. So when price is hanging out in a high volume node or near a high volume node, the rubber band effect is actually really pretty strong. And it's, yeah, like Hoffman is saying, it's magnetic. The closer you are to the node, the more likely price is to stay glued to the node. And it actually takes a pretty significant force to push it off of the node. So if you look at the low volume nodes in between these two mountains, right, look at the valley, anytime price enters the valley, you can expect the share price to move significantly, quickly, because during those prices, the rubber band effect is weak, and only a few buyers and sellers agree that that is what fair value is. And so price is extremely unlikely to hang out in a low volume node. It can. I've seen it. But usually when it enters low volume nodes, it is going to move, and it is going to keep moving really hard. And you're going to have some volatile days until it leaves the low volume node and finds itself back into a high volume node. So this is volume profile. It was invented in like the 1950s and 1960s by a couple of guys. This is one of the indicators that professional traders use, like institutional traders. You know, they go to school for, you know, finance and all that stuff, and then they get taught how to trade bonds, and, you know, they're the buy side, right, and or the sell side or whatever. So they use volume profile because this is the only indicator that I know of that shows fair value, except for VWAP. So we should also pull up VWAP. It is glorious what VWAP does for day traders, and what anchored VWAP will do for swing traders. So maybe go. Yeah, I have answers. Or I mean, I can't answer everything.
Would you combine this with COT reports?
Oh, do you mean the middle of the day volume report that hits at noon? Is that what you mean?
Commitment of traders, like basically shows where all the institutional, small banks and retail traders are at too.
So yeah, so that you could do that. So this shows you like foot traffic. This doesn't really show you anyone's position. This shows you the volume that it interacted at. So you can't really tell who's long and who's short or whatever until you take a look at the candlesticks to the left. So the candlesticks are telling us that roughly an equal number of recent interactors over the last couple of months are short as are long, as are underwater versus overwater. Like if you're ahead on the position, you're not stressing about it. If you're underwater on your position, you're stressing about it. You're thinking about getting out of the position. So when price swings down to the bottom of one of these nodes, everyone who's long is underwater, and they're going to go into panic mode. And then when price swings up to the top of one of the nodes, everyone who's short is underwater, and they're going to go into panic mode. And if you can get an actual panic to happen, the market will snap and try to send itself from one node to the next. And that is when you make the most money as an options trader, is you just buy puts and you ride it from through the low volume node as it collapses. And then you pray that it doesn't like magically find a floor and then start ripping your face off on the way back up. Because that does happen. Yeah, you can combine the volume profile with a huge number of other indicators, but this will show you what fair value is, and this will show you where other people agree on the price.
I like this chart because we come to the same conclusion using two different values.
Oh yeah. I knew that it would be interesting talking to you because you have a Forex background and you use a totally different set of indicators and a totally different vocabulary, and we're all looking for the same thing. We're all looking for the opportunity, you know. And there's a bunch of different ways to look at fair value and look at opportunity, look at momentum, look at trend lines. And there's just a bunch of different stuff that people have developed to do that. and whatever it takes for you to get situational awareness. I mean, that's the perpetual goal when it's dealing with markets. Markets are probabilistic. You cannot predict what they're going to do in the future. The best you'll ever be able to do is tell what's going on right now. And, like right now, Tesla is trading basically in a high volume node. It is unlikely to leave this node unless significant news takes it away from the node. I don't know what the news is, but it could be anything from an earnings report. One of their competitors goes under or something. The big three strike continues for long enough that Tesla just breaks to the upside because all of their competitors are suffering just that hard, and so people just throw their money into Tesla and force it to go up. I can't tell you why things are going to behave the way they are in the future, but I can usually tell you why they behaved that way recently in the past.
Can you explain that again to the audience? Because last time I mentioned the auto strike, I had several people that said that had nothing to do with Tesla at all.
Yeah, so there are the big three are under striking, and they're all getting struck on, and Tesla does not have a union,
right?
And so right now Tesla is open, and their competition is not. So they're gonna do real well. Yeah, earnings tomorrow. Cool. I'll write another article.
Actually,
yeah.
If you do an option strategy with this, would 30 days be a good expiration date for it?
So
expiration period?
What's your goal with the strategy? Are you trying to buy or sell? Do you have a thesis that it's going to be long or bearish or bullish? Like, what is your goal? Earnings tomorrow. Okay, so what would I do going into earnings? You can go long a straddle or a strangle, and go really far out of the money. And then tomorrow morning when they open, you get to close the position, and Ivy will crush. And unless there was a huge move in the share price, you'll make money. If there was a small move, you'll make a lot of money. But the risk is you could lose a lot. So selling strangles and straddles might not be as attractive as going with an iron condor or a butterfly or something like that. But honestly, I don't really touch things around earnings.
Most people say that.
Yeah,
I have made some successful trades though, just with straight call options.
Right. Well, if you're gonna keep them cheap and only throw a few bucks into it, sure, buy some lottery tickets. But please don't let lottery tickets be your investing strategy. I mean, we're all market participants. Once you get into options, everybody at some point or other buy some lottery tickets. But I do not want to recommend to the audience that like lottery tickets is a good idea. It's not. Don't do it frequently, and don't do it with large amounts of money.
Well, I mean, if you're following the company and you think they're going to have good earnings,
well, then it's not a lottery ticket. Then it's less of a.
I'm not saying lottery ticket.
Well, I am, because I'm talking about like if you go up in strike and keep the time short, you could make a lot of money off an earnings play if it hits in your direction.
Yeah.
But
I made $6,000 off of one. I can show you a trade.
Yeah. If you're following the fundamentals of a company and you have a strong thesis that this earnings report is going to be a beat, it absolutely makes sense to buy calls. But if you are merely trying to gamble and you're choosing quote unquote lottery tickets, which are options with a high, they're far out of the money and they're short in expiration, so they're going to expire like tomorrow or next week.
Like the Wall Street bets, people.
Yeah, Wall Street bets. Yeah, that's exactly what I'm talking about. If you're going to play the market like a Wall Street bettor, you better have some kind of inside information, or you're just going to lose all your money. You can even be right, but not right enough, and still lose all your money. It's a big problem. A lot of options people, they don't understand the risks until they lose all their money, and then it's too late.
Let's go to the.
As long as the batting average exceeds the strikeout rate.
Yeah,
Why does it take it out?
Yeah.
And just keep your risks small. Many small positions is far safer than few large positions when it comes to trading.
I see why it's telling me. My computer's telling me not to get in. Just wait.
Just wait. Well, there's no real strong momentum right now.
Wait. I see why it's telling me to wait though. The position, I'm on the daily, guys. I just switched to my trading screen to see what my computer would say. I have to verify before I take an entry. Because manual entries, there's too much information that I'm missing. So for the traders out there, if there's any, what I'm looking at is the 5 minute. 5 minute, I need to see something.
Yeah, Hoffman is pointing out something about earnings and options trades. They are already pricing in the expected moves on earnings, and options cost a ton. So that's why I was recommending looking into spreads, because with a spread, you're selling and you're buying, and so the fact that everything is overpriced isn't as much of a big deal. And
What
if
about
you
like
look
an
at
iron condor?
So yeah, I brought that up, but I think what's actually far better than a butterfly or an iron condor going into like an earnings report is the front put ratio spread. So like I was showing that on Enphase here on your stream a couple weeks ago, where you're selling a bunch of puts like way down at lower strikes, and then you buy one put that you're long, and you know it's going down, right? That's the premise. That's the assumption. It's going down. Maybe it's about to pay a fat dividend, or you expect the earnings report to be bad. And then as it goes down, the put that you bought goes up in a lot of value, and all the puts that you sold, if you chose them far enough out and down, the losses that they take from the move in delta will be much smaller than the gains that they make from the IV crush, because IV is going to collapse. Like Hoffman is saying, they already priced it all in. Well, the next day when the markets open, that's already happened. So the value of all the options have gone down, and so the ones that you sold have gone down. You can just buy them right back. So if you enter an asymmetrical spread like that, where you're buying one put at the money and then paying for it by selling a bunch of puts that are way down in strike, the next day when the market opens, the one that you're long will have gone up in value, and all the ones that you sold, maybe they're the same or whatever, but the point is you get to close the entire net trade for a gain. And then if
So
it
if you
takes
were
off,
going to enter a trade in the Tesla pre-earnings, the lowest point in the last like month, September 27th, it was at like 235.
yeah,
And it jumped back and forth. It's been within like a $35 range.
we can look at if you want to go to optionsprofitcalculator.com, we can like look at
Option
actually
profit calculator.
yeah, we
All
can
right.
look at actually entering a trade, or hypothetically, if you had entered one at 3:45 this afternoon when the markets were still open.
Give me a second.
Yeah, it dropped
This
down
right
to
here?
251 from 268 on the 10th. It was at 251 on the 13th.
Oh wow.
Go to 3-leg strategy. They're off to the right. Custom 3 legs. Down.
Right. Check.
In the
Legs.
custom column. 3 legs.
Got it.
And then it'll ask you for the ticker. So you put in TSLA. And then hit get price. If you click get price, yeah, there you go. So now you're going to want to buy a put. So this thing should look, we're going to look for something with like, I don't know, a couple weeks on it. It kind of, the time kind of doesn't really matter because you're just going to close it tomorrow. So a week or two is fine. So if you choose something that's really a lot closer in expiration, then you're going to take a big theta hit on the put that you're long, but you're also going to make a lot of theta gains on the puts that you sold. So probably we should go a couple weeks out, or a month out. A month out's fine.
November. Let's see. What's today? Yeah, a month out.
17th.
Yeah, that's good. I mean, it doesn't have to be perfect, as long as we choose the same date for all the puts, so that the trade can close all the same day. If you let it actually run all the way to the expiry. So now you'll need to scroll down, and we're going to look at, you're going to want to buy a put that's basically by the 254, if it exists. If it doesn't exist, buy the closest thing to 254. And you click in the, you click in the middle column, so 1420. Okay, so that put's going to cost $1,400 to get into. And then down below where it says buy, you're going to tab that down so it says sell or write. Right, yeah. And then select an option. So now we're going to want to pay for this with half of this with another option. So scroll down, find a put in the middle column that will pay us 710 or slightly more than 710. So scroll back up. I see a 650, 665, and an 8 something. Yuck, that's not very good. Yeah, I guess choose the 8 something.
815.
Yep. Okay, now for the third one, we're going to write, and we're going to write 2 of these, not 1. So write, and then go down to the quantity and type in 2. And so we need this to make up the difference. So we need these to cost slightly over $300. So scroll down and find me some puts that cost like 3.05 or 3.10 or something like that.
Let me see. This is so. I am so happy I took that course.
Oh,
this makes so much more sense now.
Oh, good. I'm glad it does. So you're looking at like the 220, the 220 strike. That looks like it might be a good price. Is that 343 or is that 243? We need it to cost slightly more than 300. Oh, it's what you're scrolling way down. It's going to be up in the above. Yeah, right there. Down. The middle column, you're looking around 220 in strike.
220 in strike for calls. Okay.
No, the puts. We're selling puts here, and we want them to cost around 300 or a little bit more than 300. So it'll be 3.05 or 3.1.
There's only a few that go around.
343 is fine. Yeah, 343 is fine. Sell that. Click on that. Now we're going to click calculate, but you have to agree to the fact that you could lose all your money, and they're not at fault if you lose all your money. Welcome to the finance world. Yeah. Options are so risky, you have to agree to be willing to lose all your money just to look at a chart. Yeah. So now you're going to want to expand the range so that we can see what happens if this all goes horribly, horribly wrong and Tesla like rips to the moon or something. So I guess down at the bottom, you can type in different values for the maximum and minimum. That's the date range. Yeah, we're going to play with the price range. Yeah, put in like, I don't know, 200 and then put in like 400 or something. You think it can reach 400 in a month?
In 2021, maybe.
Yeah, and then click update range. Boom. Okay, so we have this options trade set up. It gains money if Tesla goes down a little bit. It does not lose money if Tesla rips to the moon. It only loses money if Tesla falls below a strike of around like 205. Scroll up a little. It shows the.
Is that better?
Yeah, and scroll up a little. It shows the numbers right above the chart.
Okay.
Yeah, right in there. So it shows the return on risk on this is actually pretty bad. The break even is 212. And the probability of profit is 89.5. So this is a high probability, low profit trade. And this is one of the few things you can do around an earnings because you don't know if it's going to go up, you don't know if it's going to go down. And this only loses money if it goes down a lot. And if it goes up, you basically walk away with like, I don't know, $19. But if you scroll back down to the chart, you'll see a horizontal line, and that'll show you if Tesla goes up, you can actually close this spread out for a gain. If it goes down, as long as it's not super violent, you can still close it out for a gain. So this is one of the few spreads that I would feel comfortable entering going into earnings, because as volatility crushes, like Hoffman was saying, everything is priced in. As volatility crushes, you sold 3 puts, and you're only long 1. So the volatility crushes on all 4 of them, and you lose value on the one you're long and gain value on the 3 that you're short. So the volatility crushes in your favor when volatility collapses. Because right now it's the day before earnings, volatility is crazy high, options are overpriced. So if you sell more than you buy, right, then tomorrow when the market opens up, you might even be able to close this for a small gain merely off the fact that Ivy has crushed.
Wow. And if you're making $19 off that, it's like a 7.5% gain.
No, overnight. Yeah.
Wow.
Yeah.
That's good.
There's a bunch of if you wait for it to expire, it's a horrible trade, right? You got to wait a whole month to make like $20 or something. Yeah. But if you look at this on a 1-day basis, right? You enter this right before earnings, you close it tomorrow. You should theoretically, cross your fingers, you should make money. So what we should do is actually like screenshot this, and then tomorrow we're gonna find out how right or wrong I am.
Let me zoom out, and then we can do screenshot. Oh, this site is awesome, man. I love this site. Now.
Yeah, I love this site.
This is
any of the audience who's interested in options, this is the #1 place I go to visualize the performance of an option or a spread or any option strategy. It lets you build rather complicated strategies if you want to. And it does a good job of visualizing. It's called optionsprofitcalculator.com. And I believe it is totally free as long as you put up with some ads.
This can be done. How would I do it differently? Like I'm comparing this off of 1 day. For 19, you're talking 7.5%.
You could always change the dates and try to do this with like things that expire in a week instead of a month. It should have pretty similar results.
That is really good. I like this.
So hey Hoffman, how about you take that $19 that this spread is virtually guaranteed to hand you, and you buy a $19 Tesla lottery ticket, and then you make money if it goes up, and if it goes down, you at least you don't lose money, unless it goes way down. I mean, basically all they have to say during the earnings report is that our employees are not on strike, and Tesla will probably just keep going up.
If it does, hypothetically, just say it does go down below 200, let's say something disastrous happens.
Yeah.
That's the only time. But the probability of something like that happening, like let's look at the chart. Well, like even for me, like I'm looking at just from a chart analysis, it doesn't seem like it's going to go down. It seems like it's going to at least slap this right here and hit this up right here.
I think it wants to push higher, but it's hard to say what the report's going to say. But there's a lot of buyers that are going to step in there at 246. A lot of buyers are going to step in at 246. I don't know if it would be enough to stop a down move, but this is Tesla. It has strong support. It always has strong support. It's a cult stock.
This gap right here and these two. Once again, guys, I'm looking at this from trading perspective. If the probability of it going down from a trading perspective is very, very minimal. Because there's too many areas of it saying it's going to slap this area right here. It's going to hit this. It's going to hit the basically $260. That's like the target zone right now.
If it can break through that resistance, though, it might really try to move higher in a hurry. That's always possible with Tesla. It can go to the floor, or it can go to the sky, or the moon. I guess I should use Wall Street Bets terms.
The moon, yeah.
Yeah, it's going to the moon. Yeah.
Mm-hmm. I wish I was in on YouTube at that time. I think the growth would have been way faster.
Yeah, I thought about it back then, but I was thinking about starting a channel and like teaching game theory and like how to break games. And there's like very few people that are going to be interested in like learning, generic strategy and looking for edge. But I think there's a lot larger audience that are interested in finance, like looking for edge that produces money instead of looking for edge that helps you beat a video game or something like that.
The biggest thing I think people are into, they're looking for a way to get out of working in the corporate world and quick money.
Yeah.
I mean, if you guys want the quick money route, I would say the easiest quick money, crypto.
Dogecoin.
If you want something to do like 400,000%, that's like the quickest money. But
I'm putting all my money into High Tide right now. I talked the coach into it. He read my 5,000 word bull thesis, and now he's a barnacle. He's going to hold for life as well.
I think it went up.
I don't care if it goes up or down.
It's a long-term holding.
It's a long-term hold. Yeah, well, if the sector rips, I will probably sell most of my position when it's super overvalued, and then I will probably consider buying back in after the sector cools back off.
I should have put a limit order in because for some reason the market order ripped me off a little bit. It's like a penny higher.
Yeah. I always use limits unless I'm like real FOMO. I always use limits. I've been using limits for 2 or 3 years now.
That's
I
hurt me
kind
on
of
options too, because it's like it
yeah.
can move so fast.
Whoa.
Oh, I've been wrecked on options
Yep.
so hard using markets in the past. That's what got me to use limits. Yeah, Andre, this is a low float, penny stock. Millions of dollars flow in and out, and it goes straight up. When the time comes for this thing to go up, it goes straight up, real hard.
Real
The
quick, how do you
consolid-
feel about weekly options versus like the theta on like the weeklies versus the non-weeklies?
So, are you trying to sell options?
I can, but I feel like the weeklies are like better for some scenarios.
Like if you're gonna, so my generic rule, if you're gonna go long options, you typically want to buy with a lot of time on it. So like if I like when I buy calls on high tide, for example, I'm buying them with as much time as possible. And the general rule that I like to use is you want triple. So let's say you're going to enter like a swing trade with an option, and you think it's going to take like 2 to 3 weeks to resolve. Well, then you want something with like 9 weeks of time on it, because the last 45 days or so, you're going to have really big theta losses. And if you're going to sell options, you want to sell weeklies or monthlies. You don't want to like sell something 6 months or a year out, unless your thesis is a long time frame thesis. And like, so for example, with Tesla and all the YieldMax funds, I'm pretty confident that over really long time frames, they will go down. So that is a time when I would be like, yeah, sure, I'll sell this 18-month at the money call and just collect a huge premium. But for the most part, the closer that you get to the expiration, the faster options lose, and theta goes up higher and higher.
Yeah, especially the last 30 days. It's
Yeah, especially the
exponential.
last 30 days. And like if you want to buy something that literally expires tomorrow, you're going to lose half the value holding that overnight. I just want to make sure the audience hears this. Like, let's say hypothetically, it's a Tuesday, options, you buy an option at like 3:45, and it expires on Wednesday. Merely holding it overnight loses half the value. So
You're
you
probably
do
not going to
not
be able
want
to
to.
get out of it either.
Yeah, it might be difficult to find a buyer. It really
Yeah.
depends on how liquid the market is. Like if
It can
you're
drop
trading.
fast.
Yeah, if you're trading like the SPY or something, it's super liquid. You will find a buyer immediately. But if you're trading something like high tide here, you might not find a buyer. You might
Mhm.
even offer it up at a horrible price where they're gonna really stick it to you, and you might still not be able to find a buyer.
Mhm.
Yeah, Andre's looking at this on longer time frames. Andre, look at that gap. It gapped
Yeah,
up like
this is crazy because like I
yeah.
started measuring the weeks. If you measure
Yeah.
the day, if you measure 2 month blocks from
Mhm.
here, 2 month blocks, the accumulation zones, you can almost. Oh my god! Like this is
Yeah.
something I wish I knew. Like there's so many stocks out there, but someone told me there's 2 month accumulation zones.
Yep.
And there's a pump. Woo! It's like,
Wyckoff. When you study Wyckoff and Elliott and all that, you will find out that there are accumulation and distribution zones, and this thing is in the middle of an accumulation zone. And
yeah.
so I feel very confident just buying the crap out of this and just waiting. I have no fear that this is going to go under, because the company is their cash flow is positive. They're super competitive. They have a history of driving all of their competitors out of business. They have gone, they basically, regardless of what the share price was doing, they have been doubling their revenue every year pretty much. And a couple months ago, they came out with a thing. It was announced that over the last 3 years, they've had over 1,000% revenue growth. So that this is a company that can outgrow all of its competition, and it has a pricing advantage. So customers are willing to drive like right past their competitors to come to their stores to pay like 15, 20, 30% less. And so that they're driving everyone else out of business. No one has a chance. And this is the type of company that I like to invest in, because they're ruthlessly competitive. Like it would take Philip Morris would have to come in to try to drive this company out of business. It would take a giant. None of their competitors have any hope. That is my assessment of the business, and that is why I'm throwing all my money into it, because it is in a buy zone. It's facing a bunch of catalysts. It's currently horribly undervalued. I think fair value on this is $4.25 or something. The last time I did an actual estimate was a couple months ago. It was in the low fours, and it's currently trading at 1.5. And the last time the sector rallied, it was trading up in the 12s. So you can go to Seeking Alpha and read my 5,000 word bull thesis on why this is the best play right now for me. I mean, I was buying shares. I got shares all the way down at $1.04. So I'm already pretty happy with what's going on, and I'm going to be extra happy when it rips right past $10 a share.
I have an idea for you, Blake, on your channel. You could just read your own articles.
I could
yeah.
just read my own articles.
Yeah.
Yeah, that's not a horrible idea.
Mm-hmm.
There's so when it comes to high tide, if you do a grid spread out trade, and remember, this is, once again, I'm not doing this for you guys to do. Please don't copy me. I'm just analyzing how I would trade it. So for me, if I was looking at this, I would grid style it here. The top or the top order would be the least amount of leverage, least order size. Okay. So for example,
small size,
very small size.
Yeah.
But this larger size for this phylum, since there's a probability if it going down a little bit lower, and especially with this low right here being reattacked, it can basically reattack it with like a small wick. So basically on like a small count, it'll just wick down, hit my buy limits, and put me back into the money. I wouldn't hit market yet. I need somebody with bigger pockets to move the market first before I enter in market.
Oh, see, for me, I want to get in before the whales, because I know that they will eventually show up and cause a splash, and I need to be ready. I need to be there ahead of time. It's just different,
right here.
Different theories. Hoffman talked about scalping, and if you're scalping, I like to use tomorrow's options. So like if I'm scalping on a Tuesday, I use options that expire on Wednesday. If I'm scalping on a Thursday, I use options that expire on a Friday. And the reason for this is because I'm only holding them for a few minutes, and I never have to worry about theta. And the cheapest you can get are options that expire as soon as possible. Do not purchase options that expire today. That's a really bad idea, because they have something called charm. It's one of the like higher order Greeks that you'll find out about when you get into options. Is on the very last day when the markets open, they have like 100 charm, and they quote unquote lose their charm throughout the day, and the value of the option basically goes to zero. So you don't want to hold, or even for like 10 minutes, an option that expires today. So thank you for bringing that up, Hoffman. If you're scalping, you want to grab options that expire like tomorrow or just sometime later that week, because they'll move much harder for you. If you buy something that expires like 6 months away from now and you try to scalp it, you'll get a big move in the share price and not a very big move in the option. You want something that expires soon. Sorry for that detour. So he's up here throwing Fibonacci's up. So this is a Fibonacci. Explain this to the audience. So Fibonacci's only work because of math psychology. There's no mechanical reason why they have to work. They work because humans think they should work. It is as simple as that. That is why Fibonacci's work, which means that if there are like no humans participating in a market and it's all algos, it pays like no attention to Fibonacci's. Or depending on who programmed the algo, it pays perfect, identical, like to the tick attention to Fibonacci's. So it really kind of depends on who programmed the market makers and whose whales are taking control of the market and moving it around, and how they're programmed.
1.13 divided by 2. Oh, give me a second. I just needed the 50% line. I need to find out. So right now, since I'm doing a grid style, I need to see if I had say I had $1,000, how would I level it out, and how much would these be at market? So if I entered at market, most likely it would be at a $100 to $150 value, like amount of how much, like, if you're just buying 1-to-1 shares, no leverage. So $150 at instant market, maybe $150, $200, $300. If there's anything left, this would be small monies. Oh, wow.
Yeah, you're talking about scaling into a position, you're using grids as your indicators on when to buy.
Yeah, when to buy and also when to exit. The exiting point for down here would be really, really close up here.
Michael Anthony, yes, I am talking about high tide.
And exiting would be, once again, if you guys are going to exit a trade, how would I say it? If you use the MACD, for example, like we talked about earlier in this video, not saying to use it, but if I had to use the MACD, which I wouldn't, but the MACD would tell me to exit here. But I'm coming from a strictly trading perspective. If you're going long term, like Blake's talking about, then this is just a bounce up higher.
It's just noise.
Yeah. Yeah, I would, if I'm looking at long term perspective, I wouldn't even look at the MACD because it's just going to throw you off.
Well, it might give you better buying like locations. Like once you have a long time frame outlook, your only goal is to just get the best price to buy at, and just put in limit orders at prices you think you're going to get filled. I have a StockTwits post that I posted back in May where I was buying high tide, and I just literally put limit buys at every single penny, all the way down to like 50 cents a share. And then they were in the middle of an ETF feedback sell-off where an ETF had decided to de-leverage its cannabis positions. So it was selling off high tide, and it sold like 200,000 shares or something. And I didn't know where the bottom was, but I knew that we were close to the bottom because I was watching the average daily volume going into that day. So I didn't quite know where the bottom was, but I knew we were there basically. So I just put limit buys at every penny, and I got a bunch of awesome fills, and I got filled all the way down to like $1.04.
I'm gonna screenshot this and put this in the Discord. So when we come back to this at a later point, we have some evidence that we all looked at this. Saying that we.
I have some old resistance lines on one of my charts on my trading software. I can also post it to the Discord if you guys actually care to look at old resistance lines from like years ago.
I think backtesting is good.
I found backtesting on this would be a little bit difficult since I'm looking for only 1 to 2. So the accumulation zones are so specific. Like you can't fuck this up. Like you literally have to wait for the accumulation zone to get that big, to get that bad. Like the main accumulation zones over here and here and here. Like if I saw this earlier, I would be pissed off to miss this trade because this is a really beautiful trade right here. These 2 accumulation zones are really planned out. Like
Hoffman, I will probably not start my own Discord because I don't want to have to babysit yet another thing in life. I will happily hang out with THB's fan club. They're nice people. I like them just fine. I don't need my own fan club.
Are you talking about HIT? Yeah. This is not bad.
Well, Andre, you have Telegram, right?
Yeah, I use Telegram, guys, because once my robots start doing the Telegram service of the signals, Telegram to me is easier because it connects with my programming language. I think Discord does, but I mean, I'm pretty stubborn when it comes to changing platforms.
Do you have a lot of success selling signals, considering how flooded the market is with people selling signals who don't know what they're doing?
The reason why I do good with signals is because I live stream all my trading.
Yeah, exactly. Exactly.
Like I show people like an example. Like I live stream. So if I didn't pass out this morning when I was supposed to live stream, I was supposed to live stream Bollinger Band squeeze versus margin-gale strategy versus scalping strategy, all automated strategies, and to see how much money they can make on the New York stock, the New York open, New York close, just to see how much money, which one's best. And I'll be doing that tonight to show people why you want to see how a strategy actually plays out instead of the back test. The back test only gives you, theoretical money you could have made. But that's why a live demo test will show people how to do it in a second. I know it's boring stuff, but once you do this long term like I do, it's so normal. Like I have to back test for years before I live test into my live account.
It's fun on like Thinkorswim. You can just knock yourself out like back testing call options from like really good, like in 2020, 2021, like Amazon. I think I was telling you guys, if you did call options on Amazon stock like in March of 2020 and held like a leap option until September when we had that massive recovery, it was a massive gain. I mean, the odds of that are unlikely, but I mean, it was a massive gain.
With the martingale strategy, if that happened, like that's why like one of my clients asked me to make the martingale strategy just to employ it on the Dow. And for me, I can trade the Dow 1-to-1, or not 1-to-1, on a leverage scale. So if the Dow moves up 50 pips or 50 points, I can trade it directly on there, directly on the spot. So trading the martingale strategy, which is I'll say it is risky if you're wrong. Very, very risky, and there's limitations to it. Just when it comes to like the hit strategy, since I think it's even now it looks very bullish, the martingale strategy would be wonderful for this, because if it goes down, I would be buying. If I once again, I'm not giving you guys advice for Andre specifically. For me, I would be buying extremely heavy down here.
I just see that MACD push above the median there, and it's gone into bullish territory. And once the MACD goes bullish, I mean, I think this thing hit a golden cross. We should probably talk about golden crosses. Pull up a 200 and a 50. So just for the audience, the golden cross is a pretty common indicator that it's been around for about 100 years or so. People have been liking to use it for a long time. Because it shows you long time frame, like when a market enters bullishness and when a market enters bearishness. And there is definitely some lag on this, right? It's a 50 EMA and a 200 EMA. So by the time actual bullishness happens, it's already been happening for like a month at least before it shows up as a golden cross. So often what'll happen is like right here on high tide, there's a pretty big initial impulsive move, and that's what forces the 50 EMA to cross up above the 200. And then you'll get a whole mess of like swing traders and stuff will come step in and they'll start buying this thing with enthusiasm, because golden crosses usually have like the next 6 months are pretty bullish, you know. And same with death crosses. If the 50 and the 200 cross to the downside, that's usually a sign to get out of that investment. It's not always. I mean, things can death cross and golden cross and then still not do what you expected them to. So did it actually cross, or is it just really close to crossing?
It is extremely close.
Because take a look at what happened the last time this stock had a golden cross.
Yeah,
I'm buying call options. I've been buying call options. I've been stacking call options in this thing. I've been stacking shares in this thing. I'm just eager to make some money.
What I like about this,
aren't we all? Yeah.
This is when actually, if you guys are going to measure, this is something. If you guys measure the golden cross, and I'm talking about if you go to the daily, you usually do it on a weekly, the higher perspective. But once it starts getting close, what I would do is create an alert service. I think doesn't Robinhood have an alert where you guys can post alerts when prices or indicators about to happen?
I don't like Robinhood. If any of the audience uses Robinhood, you should switch to a real broker.
Or any of the broker. Just for me, when it comes to like waiting for indications like this, especially long-term ones like that, I put an alert. So when they cross over, and this doesn't require programming. It's just just say, hey, when price crosses or when two moving averages cross, post an alert to my cell phone.
Most brokerage softwares, instead of trying to like trade off the website, if you actually download the software, like Fidelity, Active Trader Pro, or a Street Smart Edge from Charles Schwab, or Thinkorswim, they all let you set alerts without any programming knowledge or anything like that. So just making sure the audience hears this. Some of these long time frame signals, you can set alerts, and 6 months later you get an alert. Now, does that mean you should come blindly buy? No, that means you should start paying attention. That means you should sit down and dig into the company's financials. You should take a look at what the rest of the sector's doing. Why did this thing just enter bullishness, right? If you're looking for example, a golden cross, why did the cross happen? You know, you need to get that question answered before you just buy. But, you know, I'm crazy over here. I'm a value investor, so.
As far as brokers, so Robinhood, I signed up for Robinhood to get like the free share of stock, but I never liked the layout of it. Ameritrade has been my favorite. I don't know how things are going to go with the whole merger. You know, they're switching to Schwab.
Yeah.
So I'm kind of anxious about that. But I mean, otherwise, Ameritrade was great.
Yeah, I don't trust TD Ameritrade ever since they had that warehouse fire.
You did tell me that. Yeah.
Yeah. So want to make sure the audience hears this. Research your broker, right? Don't just buy the broker with the best rate or go with the one that offers you the best deal or the best commissions. Research their ethics and their efficacy and make sure that company has a good history. because they could be robbing you.
What's your recommendation for like best broker?
So all the really big ones are pretty reputable. I have in the past used both Charles Schwab and Fidelity, and I'm right now all of my executions are on Fidelity.
Is Andre
so
in
I
the cubicle?
Yeah.
maybe you
Oh,
have
my
some
goodness.
bad echo.
I
So I
used
use
to really like E-Trade, actually.
yeah. I use Fidelity for executions because they give quick, clean fills,
Mhm.
and they're a payment for order flow broker, which a lot of people really hate payment for order flow brokers. But once you understand what's going on, I can specifically say, like, in essence, I can specifically say, hey, market maker, I want you to make like $1.50 off of filling me, and I'm going to put my price right here. And the first market maker to show up, that's who gets the $1.50. And
Mhm.
inevitably, in like under 2 seconds, I get a fill because I know exactly what the value should be, and I just price it so that the market maker gets to make a little bit of money, and then they come along and they fill me real quick because they're payment for order flow. So if I was to like ask for a market order, they would probably just send me off to some other market maker and not fill me themselves. So a lot of people don't understand this. Your broker keeps track of your trades, and if you have a bad record, they will just take the other side of all of your trades, all of them. And what this does for you is it gives you really, really fast fills, very fast fills. And I had to switch away from Charles Schwab because after about 6 months of scalping options, I noticed that my fills got really bad. And I had to wait a long time. And I did some research and I figured out what happened. They recategorized me from a trader that loses money to a trader that makes money. And then they're like, no, we don't want to take the other side of all your trades anymore.
That's a great point.
Yeah. So then they started handing, every time I put an order in, Charles Schwab was like, nah, I'm going to send this order on to the rest of the market. I'm not going to fill you. I'm going to let somebody else fill you because we're looking at your record and you're going to take whoever fills that. You're going to take their money. So we're going to let someone else fill this. And then so eventually I had to switch to Fidelity because the Fidelity was giving me much faster executions on my scalps. But that's why, is because eventually Charles Schwab was like, I'm tired of losing money to you. So I'm going to make someone else do that. And that extra 2 or 3 seconds where they pass my order flow on to somebody else to fill, I didn't want that. So I with Fidelity, I just limit in and I specifically choose a price where the options brokers are going to make like $1 off me. And then I'm also going to pay like 65 cents in commission, but I'm going to get filled real fast, right where I want it, instead of like marketing in and having to step across the spread and potentially losing a more than $1.50 just by doing a market order. So that's what I tell myself. Sometimes I get left behind, like the market will start to take off and I'm busy like typing limit orders in, and I'm chasing the price with my limits and I just never get filled. Yeah. And that's way better situation to put yourself in than buying and getting a horrible fill, paying too much, and then it goes against you. So I would much rather be cautious and miss out on some opportunities than take every opportunity aggressively.
Yeah, E-Trade actually flagged me.
Oh yeah.
Yeah, it's a long story, but I mean, they infuriated me. So I mean, I used to really like E-Trade. Their customer service used to be top notch, but like last year, you know how crazy the market was last year. It's really the last 2 years it's been crazy. But I was making a lot of trades, moving a lot of money and stuff, and something triggered something, and I ended up getting locked out of my own account.
Oh no.
And yeah, it was a mess. They held me up like I was trying to move money back, and like they really inconvenienced me. And so I'm done. Like there's like one stock I have that couldn't move to my other broker, but like it was crazy what they did.
So one piece of advice I always give to people, and I've heard this is not like original advice, this is advice I'm passing on. You want to get the phone number for your broker and you want to put that on a post-it note. And you want to stick that right next to your computer, because one day you will be like 5 minutes into a trade, you just bought a call option and your power will go out. or your internet will go out. And what are you going to do? Well, you're going to pick up your phone, you're going to call your broker, and you'll be like, I need you to exit whatever trade that I just entered because I can't see the market anymore. You know?
I actually had E-Trade's number memorized, but their customer service, they were morons. Like the people that were answering didn't even understand market basics.
Oh no.
It was crazy. I've dealt with that with them and compliance people too. It's like they're morons. How is this person even like you know, in this position? Yeah.
So the Series 7 test to become a stockbroker, it doesn't teach you how to trade or invest. And not at all. It just teaches you like the mechanics. It's sort of comparable to like sitting someone down inside of a car and teaching them how the wheel works and how turn signals work and how the gear shifter works, but never actually teaching them how to parallel park or how to negotiate a red light or a stop sign or traffic.
Right?
CFAs, they are much more aware, but even then they are only good at identifying risk. They aren't super good at identifying opportunity. So like if you want to like hunt for multi-baggers, all the CFA training is ever going to help you learn is like how to not lose money, which is good. I mean, there's nothing wrong with that. That's a good place to start, but it doesn't show you how to like find good investments. That's a separate Venn diagram circle.
Oh, I just remembered. So my first story with E-Trade before this big thing, I used to be in the DRIP program, reinvesting the dividends, and I used to be able to like manually unenroll, but it wasn't letting me. So like it kept on reinvesting the dividends, and I called and like no one knew why. So they opened a case for it, and it was like just a bunch of morons. Like I think one person didn't even know what DRIP was.
Oh no.
Yeah. And then so they opened a case, and then they finally said, we're going to have to like hard code it because it's some glitch in our system. And I'm like, this is crazy. They used to have a great platform, but that was the first incident with them.
I've never really had any sort of actual customer service problems. I just got really picky on my fills. And so that's why I moved all my money from Charles Schwab over to Fidelity. I actually still use Charles Schwab for charts. Like that first chart that we showed with the trend on Tesla and how it erodes, that was a Charles Schwab chart. They have very crisp, clean charts. And they were giving me really good fills on shares, but they were starting to give me not good fills on options. So I moved most of my money out.
Oh yeah. Guys, I'm gonna have to wrap it up pretty soon.
Sure.
You all can keep going if you want.
No, we can wrap it up. I'm sure I should probably eat something.
Yeah.
Yeah, this is definitely Jim, but this is actually interesting. During this discussion, I'm going to look at HIT a little bit harder. I'm going to put my robot up. I'm going to put my robots on it later.
You're going to stick your robots on a high tide?
It's so much easier because it'll go through and explain to me why it's doing this a lot easier.
Well, so at some point it's going to squeeze really hard, and you're used to the Forex market, and I have to warn you, this is a NASDAQ listed stock, so it has a dark pool. And the dark pool market on this, I have seen like 80% of the daily volume go into dark pools. So it's incredibly hard to tell what the market makers are doing and what their inventory is like. And so I have a really hard time day trading high tide because it is so dark pool heavy. So most of normal buy and sell supply and demand indicators, like they don't really work with a company like this. Like if you use like the ADX, or anything that shows the ADX. Yeah, anything that shows like money flowing into or out of a company, it's fucking gibberish because so much of the volume is dark pool volume. So good luck. I don't know how many of your indicators are going to lie to you, but I had to. It took me like a year to figure out what the problem was with high tide and why most of my indicators just were not telling me the truth. And it's because the dark pool volume was causing obscuredness. Like I couldn't achieve situational awareness because like 70% of the volume wasn't showing up on the charts.
Because the indicators that I personally use, I only use one indicator that everyone else uses, ATR. Every other indicator that I use personally is self-created. Everything else, because when I started looking at how I would enter, and then my robots how they'll enter, we're almost exactly at the same price.
All All right, so Coach said he wanted to wrap it up, so I guess we should start saying goodbye to the audience. This is my chance to remind the audience to like and subscribe here for the coach.
Oh, here. Where's the THB channel?
And
guys,
then,
you guys.
Yeah, our channels need the help. Your channel, Andre, is rolling.
Yeah, Andre's
I'm
vastly outstripping our subscriber count over
Yeah.
here. I should also ask any of you who wants to hear me ramble. I'm going to try to do live streams where I just answer people's questions.
You should do that and just read your articles on your channel too.
Yeah, I need to look into the terms and conditions and find out if they're going to get pissed off if I plagiarize myself. They've already gotten pretty upset at me for trying to like copy paste my own paragraph from one old article to another article.
It's your material.
Well, I know it's my own material, but they have a problem with it because they want my readers to read only original content. And so, like, if I have a thesis, like a long-term thesis about solar panel company A, and I'm also writing about solar panel company B, C, and D, the paragraph explaining that solar panels are really cheap and people are buying them left, right, and center, that can be basically the same paragraph. So I was trying to copy-paste that over, and they no way. They won't even let me do that. So
I actually thought
about
reading your articles on my channel and just
you're welcome to. Yeah, you're welcome to.
Okay.
I'm just worried that if I start doing it, they might have a problem with it because I'm the one writing the article and I'm a contributor. So
yeah,
that could be an issue. I need to go back into their terms and service. Maybe I should just shoot them an email and ask them like if that's a problem or not. Like, because I would happily just read my articles, and I wouldn't read them word for word because I suck at scripts, but I would talk about the company, scroll down to the charts, talk about the company some more, talk about the charts, scroll down to the valuation, talk about my PEGI ratio, all that stuff. I could do that. I'm just not sure if it would piss off Seeking Alpha. Blake, what's your site? I'm here on YouTube on Blake Downer EIT. So you can go ahead and find me on YouTube. I only have like 2 videos. One's a live stream and one's a short. There we go. That's me. I'm going with gray for my theme. I think I'm going to try sticking out by being boring. We'll see how well that works. If it fails, then I'll go for something bright and colorful like orange or something like that. That's going to catch your eye. But I was thinking I'd just be different and be the only one with like flat gray thumbnails and stuff.
I mean, so guys, please subscribe to this channel. If we can get him to, what is the minimum? 1,000, right? You need 1,000?
Yeah, 1,000 will make my wife stop complaining that this is a big waste of my time. Because then I'll get to monetize the channel, and then I'll be like, "Look, honey, I'm making like $50 a month."
It's like any business. The toughest part is starting up front.
Yeah, exactly. Yeah.
Yep. Honestly, it's the hardest part. Well, you need to do live streams because for me, it was harder to hit the watch hours.
Yeah.
Than it was the subscribers.
Okay, so you got to watch hours well after subscribers.
Yeah, I got the same thing.
Okay. Okay. So
now
maybe
with live streams and the audience, like I think I've hit 30,000 watch hours, which is insane because back in April, I was actually struggling to meet the 4,000. So that's how quick between April and now, like with this, YieldMax stuff. But yeah,
maybe I should try for longer streams. The only stream I did so far was all about options, and most everybody just clicked away because they don't trade options.
Once you get a core that watches though, like right now, there's been almost 40 this whole time. So this will be crazy for like watch hours because we've gone 2 hours times the 30 people watching.
There's 80 watch hours right there. Yeah,
exactly.
Yeah, once I get a core audience of people that just want to hear me ramble, it'll work out pretty well.
And we can alternate, like I can come on your channel and do a live stream, and that will help. We'll have the audience come there. Yep. Yeah,
I can cover any company or ticker that you want to talk about. As a thank you to anybody who comes on my live stream, I'll talk about whatever they want to talk about.
I got one, BTC USD.
You want me to talk about Bitcoin? I probably won't have things that you want to hear about Bitcoin.
Like halving next year, right? The Bitcoin.
Yeah, I already won't buy gold. What do you think my odds are of buying digital gold? Yeah, pretty small, huh?
That reminds me to look at my crypto.
It could be doing just fine right now. It's not for me,
XRP.
Oh my. We did another crypto, and I like this polarization. It's so.
I don't know how to get out of it. I mean, it's up like it's 4x, but yeah.
XRP, but yeah, man, I gotta hit the gym now. I'm getting.
Yeah.
But thanks, guys. Please
All right.
subscribe to
Thanks,
me
guys.
if you want to.
Yeah, you guys all have an excellent night.
Yep. You all too. Like, comment, and subscribe. Thanks for tuning in. Take care. Good evening.
In stream.